Okay. Good morning, everyone, or afternoon, wherever you're located. And thanks for joining us today. Or in this webinar, we're looking after employee versus contractor. So I'm not going to steal much of Tony's thunder at this point, but it's a relevant topic. It's always been in the limelight, and this case that we're going to run through just proves that it's an ever-changing landscape as well, particularly in the way that businesses learn to adapt and do change their business models. So we are recording today's session. So for anyone interested, I imagine the recording will be available as well as the slides. So we'll pass them around. If anyone has any particular questions or whatnot, you can always email us at eventswa here at Moore, or also Tony with his details right at the end of the session. So again, thanks for joining us. What I'll do is I'll just introduce Tony. And give you a bit of a background about his experience. So Tony's been with us a few months now, and he's fitted right into the team. So he's brought a big level of expertise in the indirect tax space through to us here in WA, and we're likely to tap into that, and we want you guys to actually be able to tap into that as well as a resource here at Moore WA. So Tony has about 30 years experience in indirect tax matters, and he was involved with GST since its inception as well in Australia, and was a spokesperson for the CPA during its implementation. I'm sure Tony will tell you all about his experience with sales tax as well, as he loves it, because it went further back than GST. So Tony also practices in the area of fuel tax credits and other state taxes as well, such as payroll tax and land tax. So in this capacity, he is presented on indirect tax topics at a number of state and national events, including CPA Congress and the Taxation Institute State Taxes Conferences as well on a number of occasions. And also, Tony has been involved with Curtin University and has been a lecturer there since 2003 on undergraduate and postgraduate courses, as well as the Tax Institute's structured education program. So he's been around a lot in terms of training with staff as well. And we love Tony because he's got a lot of commercial experience that he can share with us and with you as well. So with that, I'll hand over to Tony. We've got an interesting case to talk about today. So yeah, over to you, Tony.
Thanks, Daniel, and welcome everybody. The employee contractor issue is a chestnut that's been around longer than me. This one is a little bit different. And that's why I've entitled the session, The Curious Case of GST and Other Taxes, because the employee contractor issue normally raises its head in payroll tax or superannuation guarantee or fair work dismissals, which are cases that a couple of cases we'll look at the end. But let me just go on to the next slide. No, if I can. No, help. Technology is not my strong point. But there we go. So the purpose of this webinar, here he comes, help's on the way, but I'm all good. Thanks, Esther. The purpose of this webinar is to highlight the potential issues of getting the classification of worker wrong. So it's a GST case and a PAYG case. So it's not limited to payroll tax and SGC, which can be real problems. And I don't know if state revenue came after these people once the decision was made or not. I suspect they did, but getting it wrong can have a number of adverse effects, and we'll look at those at the end. So it's not just limited to what you think is the obvious thing. So why is this case so important? And the case we're looking at is called HKYB, and I'll have that slide up in a moment. But why is it so important? Well, it was argued by senior counsel on both sides, so it was well resourced. They had about $7.5 million on the line. So the incentive to get good counsel was important. Some of the cases that we come across in this area are argued, that they're not argued in detail. This one was, so it was something that we can take out. It was an AAT case, but it was decided by senior members, one of whom was Justice Logan, who's a judge in the federal court. So the AAT have brought in a senior member to decide on this. So we've got senior counsel on both sides. We've got a senior member of we've got a judge of the federal court as part of the decision-making team. Why else is this case so interesting? Well, it concerns the operation of a brothel in Brisbane. So apart from the salacious nature of the commercial arrangements, the decision is compelling from the fact that all the names have been changed and the tribunal uses their own pseudonyms. Yeah, I found it very interesting, and they've given some really interesting pseudonyms to the name of the brothel, to the name of the trust that owned the brothel, to where it was. They've gone to a lot of trouble to come up with some great names through there. The other compelling part about this case for mine was that, notwithstanding the jokes that you can make about it, but the arrangements are not dissimilar in many ways to the operations of many medical practices. And I'll go through these in a moment. But the arrangements are not uncommon. So that's the other compelling part about it. For those listening that are accountants or advisors, the tribunal was also very scathing of the accountant, the external accountant for the brothel, which they called the Cytherean, which I'll talk about in a moment. But the accountant, apparently, the limit of his involvement was to say that he had found a private binding ruling on the tax office website about the supply of adult services and simply applied it to the arrangements in the case. But he gave evidence before the tribunal and was underwhelming. They gave him a pseudonym as well, and they called him Mr. Derrick. And I'll just read out briefly what the tribunal said about that. Mr. Derrick's answer that he did not look at the applicant's website because that would not have been approved by the firm was not, with respect, credible at all, much less pervasive. We were left to wonder whether the answer had been recently invented. Not going well for Mr. Derrick so far. Be that as it may, viewing the applicant's website could hardly have been regarded as gratuitous, much less Puritan, given the professional service he was rendering to the applicant. So a lesson for all advisors there is know thy client. Yeah, so Mr. Derrick did cop a bit of a hammering. Briefly, the background, and I'll just, that's the case. And I make the note there that the facts, as always, were critical. We'll look at a number of other cases briefly at the end, always fact specific, but they give a good indication. I want to go through briefly, and it's pretty lengthy, the next slide, but I think it's important just to give it some context. And it's interesting the way the tribunal has broken down the sexual services into GST speak, which I kind of like. In all, there were 19 bedrooms in the brothel. It is in these rooms that the sex workers physically provide sexual services to clients attending the brothel. I should make a note that none of the workers and none of the clients were called to give evidence in the case. So what happened behind the closed doors was not in evidence at the tribunal, but clearly wasn't relevant enough to change the outcome. We have deliberately used the proverb physically because an issue of central importance is whether, for GST purposes, it is the applicant or the sex worker who supplies the sexual service. Get down to the GST. For the purposes of the GST Act, a taxable supply is made materially if you make the supply for consideration. The applicant's case and the means by which it seeks to demonstrate that those assessments are excessive is that it does not supply that sexual service, only the facility where the service is conducted. The supply for GST purposes of the sexual service is said to be made by the sex worker. The Commissioner's GST assessment are premised on there being a single supply by the applicant of a sexual service to a client in a room at its brothel. Resolution of these competing positions entails a question of characterisation as to what, on the facts, is the supply or the supplies. If you superimpose medical practices, for example, and you can even go further on this scenario, you can see where the issue arises. It's not limited to medical practices. You can also talk about the gig economy. And if you'll pardon the pun, ride sharing can apply to the same thing. So when you go into the ride sharing arrangement, who's supplying the service? Is it the driver or is it the platform? So if you bear that in mind, when we look at this, you'll see why it's a time bomb, if you like. So ignore the heading, that's my fault. What we have here is the two competing scenarios. So the tax office is saying that the client goes to Cytherean, which was the pseudonym for the brothel, which is, I have got it here. Cytherean was from Greek mythology, apparently. From Aphrodite, I think, was born in Cytherean, doesn't matter. The tribunal had a bit of fun. So the client makes a payment to Cytherean. Cytherean, this is the tax office view, Cytherean engages the worker to provide the services to the client, and Cytherean pays the worker for providing those services. So that's the flow of money as far as the tax office is concerned. The taxpayer said, no, this is all different. They said, all we are doing is supplying a room to the client, and I'll come back to that, and we're supplying administration services to the worker. In return, the client makes full payment to the worker. The worker provides services to the client. The client provides part payment to Cytherean for the room, and the worker provides part payment to Cytherean for the admin services. The somewhat strange arrangement here, and it was never explained, is that Cytherean said that it provided admin services to the worker for which it had some sort of loose agreement. It wasn't very professional agreement, but it also provided a room to the client. So when the client came to avail themselves of the service, they paid a total figure, but that figure included a certain amount that went to Cytherean for the room. This is a somewhat unusual arrangement. I can't speak about brothels, but for medical practices, because medical practices will typically provide all of that to the doctor. So the medical practice will provide the admin services and the room for an all-inclusive price, normally a percentage of their fees. So this was somewhat unusual, and in part, I suspect, why Cytherean were ultimately unsuccessful and ended up having to pay $7.5 million. But clearly, well, not clearly, that no client was called to give evidence, but there was no evidence that the client actually knew that part of the money that they were paying was for the rent of the room. So apart from that, not dissimilar to a medical practice. So what Cytherian was saying was that they had a GST liability on supplying the admin services to the worker. This is in the left-hand slide. And they have a GST liability on supplying the room to the client. So they're saying the worker pays them for the admin services and the client pays them for the room. They're also saying that if there is any GST liability on the provision of the service to the worker, from the worker to the client, that's nothing to do with them. That's an arrangement that the worker has. And in evidence, it was apparent, well, it seemed that none of the workers were registered for GST. And in fact, a number didn't even have an ABN, which ultimately didn't do Cytherian any favours. So the ATO was saying that the client paid the full amount to Cytherian for the service, and Cytherian made a payment to the worker and engaged the worker to do the work. They are saying that GST is on the full value that the client paid. I think the next slide just talks about a typical medical practice. It does indeed. Well done, Esther, in changing the outline of the doctors and the patients so they no longer look like clients and workers at the Cytherian. So what happens when you go to a doctor typically is that you make the payment to the doctor and the doctor provides services to you. The doctor then provides a payment, typically a percentage, maybe 40, 30, 40% to the medical practice, and the medical practice supplies the room and the administration. So you can see it's not a mile away from the Cytherian position. Sorry for the lengthy dissertation here. What the tribunal decided, I'll read the full paragraph. Giving this and having regard to the applicant's price list, the price list was set by Cytherian. So when anybody came in for the service, they knew what the payment was for what they were getting, and the workers had little control over pricing. Having regard to the applicant's price lists, where within the Cytherian that price list was displayed, its website, that payment was made gross to it, as we do for the medical practice, and the position as revealed in the review of sample months of job sheets, the inference is inescapable that the only contract into which the client entered was with the applicant, that is Cytherian, the brothel. That contract was for the supply of a room at its brothel of a sexual service. The manifestation of mutual assent, which comes out of some high court cases, federal court cases, sorry. So we talk about this manifestation of mutual assent, was that the payment by the client to the applicant of an undissected lump sum and the applicant's acceptance of that sum prior to the delivery of the requested sexual service in one of its rooms. Here, the quote, character of supply made as a result of the performance of the terms of the contract, which is from a GST case in 2014, was a single supply of a sexual service in a room, not two discrete supplies, sexual service and room by the sex worker and the applicant, respectively. So Cytherian was left with a bill of about $7.5 million Some of that was GST, some of it was pay-as-you-go withholding. Now, the tribunal made no, in fact, they deliberately stayed clear of talking about whether or not the workers were employees. There was enough in the pay-as-you-go withholding legislation to suggest that they had a liability for pay-as-you-go withholding. And therefore, they didn't, and they copped a huge whack for no pay-as-you-go withholding. Now, that seemed a little sloppy by the Cytherean, but it was what it was. The inference was that the workers were in fact employees, but as I said, the tribunal steered clear of that in the first instance. I just want to move on to a number of other cases that have come up. I've got a couple here that are relevant. Thomas and Nas was one that was decided only a month or so ago. And it's shaken the medical industry across the board because it said that doctors were found to be, payments to doctors were found to be wages on the basis that it was the doctors, in fact, providing a service to the medical centre. I should make a note here that this was for payroll tax purposes under what they call the relevant contract provisions. Here in Western Australia, we don't have those provisions. We're the only jurisdiction that doesn't. But I won't bore you with the history of the relevant contract provisions, but OSR in WA has historically felt that there was no need for the relevant contract provisions because all they did was put extra case law and extra requirements onto what were otherwise employees. So it's quite likely that the Commissioner in Western Australia, in similar circumstances, may argue that the doctors are simply employees. Now, there's a bit of historical basis for this as well. What should I say? I think many of the medical practices that I've been involved with in advising have got a little bit complacent in the way that they do their arrangements. And I think it's really time that they had another look at them in view of the Thomas and Nas case. I was informed this morning, in fact, that the taxpayer is appealing this case, which is unsurprising. So we'll see where that goes. But it has very broad application across the board. The second one I put here is a slightly older case called Commissioner of State Revenue and the Optical Superstores case. That one was to do with optometrists employed by optical superstores. They were a deemed employer, and all payments to the optometrists were held to be taxable wages. Once again, fact specific, and one that didn't initially cause too much concern to medical practices because the arrangements in the optical superstores was quite specific and far enough away from typical practices to be not of too much concern. What was of concern, however, and you can apply this, as I said before, across a range of industries from medical practices through to the gig economy, what it did find on appeal, it was confirmed on appeal, is that the payment of the money, I'll go back a step. In a medical practice, Can I go backwards? Oh, no. I can go backwards. I'm smart enough. In a medical practice, what happens is all the money ends up in the medical practice as trustee for the doctor. So the medical practice will say to the doctor, we'll collect all your money and we'll give you 60% and we'll withhold 40%. What the optical superstores said was, because they had a similar arrangement, what they said was that the payment of the money from the medical practice to the doctor was a payment. Optical superstores said, no, it's not a payment. It's the doctor's money or the optometrist's money. We're simply giving it back to them. The court and on appeal confirmed that payment can include giving somebody else their money. And this has been confirmed in the Thomas and Nas case. So they're saying that simply giving somebody back their money can be a payment for payroll tax purposes, which is has broad implications if we're into the problems. Then we can't get out of it by saying it's not our money. We're simply giving back the doctors their money. So optical superstores said that giving back somebody their money is paying them. And I guess, if I borrow $20 from somebody and I give it back to them, I guess I'm paying them. Smarter minds than mine in those ones. There's a couple of others that I want to touch briefly on that aren't here, and they're to do with the gig economy. And one of them was called Joshua Kluger and Fedora. This was a 2018 case, and Joshua was ultimately a bike food delivery person for Fedora. Now, once again, fact specific, and I won't go too much into it, but Fedora were a food delivery, typical food delivery setup. Joshua was terminated. His services were no longer required. He took Fedora to the Fair Work Commission and said, unfair dismissal. The Fair Work Commission said, well, we can't talk about that because you are a contractor and we only do it for employees. So the Fair Work Commission had to determine whether Joshua was an employee or a contractor and would therefore could claim unfair dismissal. Ultimately, it was held that he was an employee, and so the Fair Work Commission found in favour of him, and he was awarded a small unfair dismissal amount that certainly wouldn't have caused too many people too much concern. But as the decision hit the ground, Fedora shut their doors in Australia because both the Commissioner of State Revenue and the Federal Commissioner of Taxation were lining up with assessments for, in the first instance, payroll tax, and for the second instance, superannuation guarantee and pay-as-you-go withholding requirements for Fedora. Now, if you apply that across all their delivery people, you can see why they closed the doors and why Fedora no longer operates in Australia. Why doesn't that apply to the current food delivery people? The answer, I suspect, is that their arrangements are different enough, only slight, and to you and I, there would be no difference, but they're different enough at the contractual level to mean that they don't have an issue at this stage. I'm sure they're all nervously looking at it, and I'm sure it's front of mind for them, but we'll see. There was a case, there's an Uber case that's awaiting High Court decisions as at the moment, there's a couple of High Court decisions. Sorry, there's one High Court decision. Uber is currently in Fair Work, and they're awaiting the High Court decision. There's also the Construction, Forestry, Maritime, Mining and Energy Union versus Personnel Contracting, who are also waiting the High Court decision. And that High Court decision is in a case called JAMSEC and ZG Operations. This is also one that's fact specific, but will cause a lot of issues. Well, it'll be an interesting decision, as all High Court cases are. These JAMSEC and a couple of his mates have been driving trucks for ZG Operations for 20 or 30 years. Now, they have their own trucks, but all they do is drive for ZG Operations. And they're, but to cut a long story short, they're putting their hands up and saying, look, we're employees, even though we're providing trucks that are worth 100, 150 grand, we are basically employees. Now, this goes against conventional wisdom from the Babu case, which was the bicycle couriers case of 20 odd years ago. But it will be interesting. So now it can be, even if you contribute 150 grand's worth of assets to your employment, you may well still be held to be an employee. Ticking time bomb for all, I don't know what the generic term for employers is, but for all people who engage workers. So the conclusion is really, and there's lots of information in there. So I could have dived a lot deeper. I could talk about this all day long, and it's a grey area, but you need to be aware of it. So as well as the GST and PAYG implications of HKYB, which are, as I said at the start, unusual because normally it comes in through payroll tax or SGC. But HKYB could also be up for payroll tax. They could also, if the workers had good representation, they'd put their hand up for SGC. There could be workers' comp implications. I've put there the mind boggles. I'm not quite sure what injuries they'd get on the job, but you never know. They've got to be covered by workers' comp. There's income tax implications. Now, the income tax implications and the next one, the financial statements, the tax will be the same. So the money that the worker gets and the money that the brothel gets are ultimately going to be the same, but their turnover levels can change. So it can take you for income tax into different, you can become a larger employer because of your turnover. And it's similar, I guess, to the ride share. So when you hop in a ride share, are you a customer of the driver or are you a customer of the platform? And that, in many ways, might answer your question. As it stands at the moment, you are a customer of the driver. So the driver gets the full income and gives some of it to the platform. If you change it around, the platform gets the full income and gives some of it to the driver. So you can see for financial statements and, you know, what's your turnover and all those sorts of things, it can change even though the bottom line may stay the same. I think just on that, as a slight aside, as to who the clients are, in my mind, is one of the key issues. And it's a key, it was an issue in the brothel case, and there had been previous brothel cases where they'd come to a different decision. And these were raised in the AAT, but distinguished by the tribunal in the decision. But a lot of it depends on who the client who you're going to see. So if you go to a doctor, most of us go to our own doctor because we know them and we want to go to them. So if they move practice, we'll go with them. Some of us, for all sorts of reasons, my wife on the weekend went to a generic medical practice because she needed to see a doctor on the weekend. So the question, if you're going to see a specific doctor, the doctor might argue that that's my patient. If you're just going to a generic medical practice, they might argue that it's the medical practice that is running the business. So those sort of issues, I don't know the answer, but I suspect in the longer term we'll have some application as to what the final outcome is. With the HKYB case, it was evidence that most of the clients, and the clients were generally, but not exclusively male, did not come to see a specific worker, and the workers were exclusively female. So it can change. The key point, I guess, that I want to make today is that you've got to understand with all these type of arrangements, whether it's rideshare or whether it's medical practice or whether it's brothel, what you need to do is understand exactly what you're trying to achieve and make sure that the agreements that you've got and the actual working arrangements reflect this. So the agreement's got to reflect the actual working arrangements, and they will give you the answer. If you need to change the agreements and the actual working arrangements to make it less likely, then that's something that the businesses will need to take into account. But it's something that we all need to look at. That's all I have at this stage, Daniel. Any questions?
Thanks, Tony. What I'll do here is I've got a couple of questions for you, Tony. But in the meantime, there is a question and answer sort of box or a chat box down there. If anyone else is sort of keen to sort of hear from Tony, he's very experienced, so feel free to pop any questions in the chat and we can have a chat through them, whether related to the case or anything else. Feel free to do that. But I've got a couple of questions, Tony, that you might be able to run through in the meantime, just based on a couple of things you were saying there. Look, it's interesting the way this is all moving. You know, we've got the gig economy. I suspect that's going to, you know, go even further into, you know, apps and providing this peer-to-peer network. So these arrangements are always going to be challenged. Going back to your medical practices comments that you're making, obviously the similarities between this case and medical practices, it's a common industry that I would have thought they've been operating they've been operating the same way for quite a number of years now. So I thought the law in that area was kind of settled. So do you mind sort of going into what really has changed over the last few years?
Sure, and it's a good point. They have been quite settled, and I think my observation is that the medical practices are getting a little complacent about it. The other thing that I was discussing with somebody the other day is the basis for this whole, for medical practices, for doctors being treated as not being employees, was largely an SGC ruling from the commissioner, 15 years ago or more. And it wasn't even a ruling, it was one of these lesser fact sheets or something. But they decided that the case that he relied on was, strangely enough, to do with erectile dysfunction and whether or not the patients of the doctor, whether the doctor could take the patient records with him when he left. And it went to one of the tribunals, like it was medical practice tribunal or whatever, And the tribunal said, look, held that the records belong to the doctor because the doctor was the treating person, therefore they could have the records. So the Commissioner of Taxation said, well, this is the case that says that the records belong to the doctor. So in that case, we consider that the doctor is a contractor for SGC purposes, therefore they're not an employee. So a lot of what we've been working on, both state and federal tax, is on this case that, if you look at it, was really never designed to do what everybody's building it on. It's never really said whether the doctors were employees or contractors. It's never looked at the arrangements. It just said, who do the records belong to? So that, your question, so excuse me, we've got there. So we've got this kind of tenuous base, and a lot of medical practices, in my view, have gone, it's not a problem, we'll just set it up. I have knowledge of a medical practice that has a standard agreement with its practitioners, saying, you know, the standard stuff. And I asked where that agreement came from, and I was told that a friend of his had a similar one and he's borrowed it. So I suspect that's happened, and because there hasn't been any issue with it, I don't think anybody's cared. There's been a number of cases. I had some down here that I was, the optical superstores. There was a case, a payroll tax case about radiologists, which was where they were held to be subject to payroll tax as well. So the short answer, people have been treating it as not an issue because it hasn't been an issue, because state revenue haven't been looking at it. The Commissioner of Income Tax hasn't been looking at it, but I think they will and they should. There's been a number of recent cases. So I don't think it's as settled as medical practices would have liked. I recently spoke with a specialist practice, and they're amending their agreements to reflect what is the truth. One of the issues that I spoke about was who owns the patients. In their agreements, they had that they owned the patients. And they said, well, it's just not true. Well, whenever a specialist leaves, their patients go with them. And it hasn't happened very often, and we don't chase them, but the patients are not ours. The patients come to see their specialist. There just happens to be in this practice. So they've removed that from the agreement. As well, it doesn't do anything. So things like that, I think they'll need to all have a look at. So yeah, it's a moving feast at the moment, and moving very quickly.
Okay, no more questions so far, but I've got another one. Yeah, it's an interesting point you make. It's just, in any industry, we've always done it that way. No one's raised any issues, so it mustn't be an issue. With more information sharing these days, it's always prudent to just go make sure that the things that you are doing, just in any respect really, but this in particular, reflects the reality, so it's good. About halfway through, you sort of mentioned that AT deliberately didn't comment on the worker status as common law employees, and they completely left that out of the case, deliberately. But you did mention they had a PAYG withholding obligation. So how did that occur then if they weren't employees?
It's interesting that the tribunal did make a quote about that, and they said something like, they made an assumption. They said, okay, look, assuming that they're not employees, we'll move on to the next step. And the next step was pay-as-you-go withholding. And for those of you smart enough to remember where the pay-as-you-go withholding rules are in the Tax Administration Act, hidden away in a schedule, it took me years and years to work out where they were. there's a rule that says that if you pay, if you make a payment to somebody else for a service, then you've got to, and you don't have an ABN, then you've got to withhold. Now, they didn't have ABNs, which is, I guess, part of this overall, getting your ducks in a row type arrangement. So if you are going to purport to run a business as the way Cytherian did, and you're engaging workers, then it's imperative that they have ABNs or whatever. But they didn't seem to have. So they simply went through the no ABN withholding. They said the workers are providing service to you, which Cytherian said, well, they're not providing a service to us, they're doing it to the client. For the reasons that we've spoken about, the tribunal said, no, they're providing service to you. Therefore, you're paying them. Therefore, there's the no ABN withholding. And it was interesting because it ended up costing them $4.5 million in pay-as-you-go withholding. But their view was that they weren't, all they were doing was providing a service. All they were was providing admin services. So there was no payment to their view was there was no payment. So you can see when the way the money goes changes, it has really cascading effects. We haven't paid any money. We've simply given the workers their money, giving them their money back. So it's a real Pandora's box when you come to a different conclusion about, I was going to do a bad joke, but about where the money goes and who's paying.
Yeah, so interesting. That being said, so do you think the result could have been different if the arrangement was different, given what was in the contract?
I think they were destined, and I felt sorry for the senior counsel that was arguing their case because it seemed to be after the fact. The agreements were, if they did have agreements, they were fairly basic agreements with the workers. They had no agreement with the client about the rent of the room. The workers didn't have ABNs, which you would normally want to make sure that your workers did, I guess, even if they're not your workers. So could it be different? I think if they had have done what I said here on the slide, if they knew what they were trying to achieve, that they should get agreements that said what they're going to achieve and make sure that the workers understood everything. So if everybody's on the same page, then it's possible. It's possible. And I think that gives us some hope, certainly for the medical practices. But yeah, so could it work? Not with those facts, but could you modify the facts in a future scenario to make it work? So if you're taking over the Cytherian, which I suggest would have been up for sale after the $7.5 million, yes, come and see me and we'll work out some arrangement where we can get it to work.
Yeah. Yeah, I think that sort of leads to my last question. So practically, I mean, a lot of people on this call here, maybe part of businesses that are engaging contractors. So practically, if they are, I think you've just answered the question. Then, what are the key things that they really should consider or be mindful of particularly if they haven't reviewed their contracts in a long time?
Well, I think it's key, and I've seen this many times over the years, is that you understand exactly what you're trying to do. And sometimes it doesn't work. Like sometimes we've all had the situation where the client will go, I want to achieve this. I want to have full control over my workers, but I don't want to pay payroll tax. And you go, mate, give me a solution I can work with. Like you need to work out what's important and what's not. And I think Yeah. So the answer is work out what you want to achieve and whether or not you're prepared to set up the arrangements to achieve that result.
Yeah.
The specialists that I dealt with earlier were prepared to say, we don't care who owns the clients. They're their clients. In practice, they're their clients. So let's get rid of it from the agreement. Not an issue. So you need to be aware of all those issues and what are going to be the sticking points, I guess, what are going to cause the problems and whether or not you're prepared to deal with them.
Yeah, commerciality. I've got a question from, I think I can pronounce this correctly, Pujan here. So you might be able to open that up, Tony, but I'll read it out anyway. So considering the fact that employee versus contractor debate is much clearer in some industries like cleaning service providers, why do you think the arrangement of service providers considering the employees as contractors so pervasive in the industry?
My understanding of the cleaning industry, there was a number of industries that have kind of legislated away from the employee contractor issue. And they've said, I don't care whether you're an employee or a contractor, we're going to treat you as an employee, for example. So I think that's what's happened with that. The cleaning industry as a whole is still an issue because I had one of those earlier this year with SGC. I think, I'm not sure the basis of that question is correct. I don't think we're getting any closer to the employee contractor issue. In fact, I think we're getting further away. And the reason we're getting further away is because we've got this dichotomy that you're either an employee or a contractor. And the gig economy is a classic example of people that really kind of sit in the middle. They're kind of employees, but they're kind of not. So as long as we've got that dichotomy, I think that we've got problems. A friend of mine, late last century, showing my age, was a guy called Graham Harrison, who was the Deputy Commissioner of Taxation here in Perth. And his role towards the end of late 1990s was to put to bed this employee contractor issue once and for all, to have a set of rules within the Income Tax Act so that we all knew who was an employee and who was a contractor. So after several years, Graham threw his hands up and resigned and went and worked for the United Nations. Solving the Middle East crisis was easier than the employee contractor issue. So I think the cleaning industry, for example, and there's a few others where you go, look, I don't care whether you're an employee or a contractor, you're going to do this. But I don't think it can work. It's really hard to legislate finitely. And at the moment, there's gig economy popping up everywhere with different arrangements. And so it's all very well to say, for example, for the cleaners, your employees, what about the rideshare drivers? What happens if the next rideshare platform has a different arrangement? How you move with that is really difficult.
Yeah, I completely agree. As every arrangement's different, got its own set of facts, so we're always going to have problems in this issue, or in this area. Now, sorry, just to close out, we've got a few extra minutes, so I might just throw this question out there as a bit of a cover-all: is if people do have concerns, so they've reviewed the documentation, they may have concerns about how they're treating these arrangements, practically, what's the next step that they can take to really get to the bottom of it?
Well, come and see you and me, I guess, Daniel, is the short answer. But they really need to apply the blowtorch to their arrangements, because the scope of potential liability, as we've seen from the HKYB case, is very broad. So you might say, okay, well, I'm not called for SGC because the people have all got proprietary limited companies. And you go, well, yep, tick, you're off the case there. But the GST implications, the workers in this case didn't have proprietary limited companies, but they may well have. So they still end up with pay-as-you-go withholding and GST implications. They still end up with payroll tax implications. They still could end up with workers' compensation issues. So I guess you really need to put, as I said, the blowtorch on the arrangements to make sure that the range of potential issues that are likely to cause you grief are limited, or one of my favourite words, ameliorated. So you can just reduce the risk. I don't believe that we can get rid of it altogether, but you can certainly reduce it across the wide range of arrangements. So that you don't get the $7.5 million assessment or the 5-year payroll tax assessment and things like that.
And we know you can't contract your way out of it. That's definitely
Correct.
the case. Do you want to flick forward just quickly, Tony, with a couple of slides just for your details, and then I'm happy to let you sort of round out the session as well.
Yes, that's questions. That's a good-looking photo of me. I'll have to get them to airbrush that a little. I've been in a good paddock over lockdown. In fact, one of the cases, Daniel, you're talking about contracting, one of the cases several years ago, one of the judges made the comment that if it looks like a duck and walks like a duck, it's a duck. So even though you call it a goose, it's still a duck. So you're quite right. You can't contract out of it. Although I should emphasise that a contract is the best starting point anyway, as all the lawyers will tell you, but it's got to reflect what's actually happening.
Very true. Okay. I haven't got any more questions, so maybe we'll hang around for a few more minutes in case anyone has anything they want to pop up and we can have a chat about. But thanks very much for you joining us today. For those who are listening at home or watching it later, I hope you have a good day as well. And yeah, please let Tony know if you have any questions, or feel free to email me, Events WA, and we'll pass around copies of the slides and the recording to everyone else later. So thanks very much and enjoy the rest of your day. Your suit choice, Tony, today is the inverse of your picture. Sort of. Thanks, Regina.
Yeah. Does this one make me look thinner?
Sure.
I'm going to have to talk to Esther and we have to get that airbrushed. Otherwise,